Hey everyone, and welcome back to Successzone. Today we're going to be talking about a whopping $34 billion fraudulent strategy by Nikola Motors. Make sure you stay until the end so you don't miss out on some huge mistakes the company made. You won't believe it. Background: Tesla's relentless efforts in the EV market pressured General Motors and other legacy automakers to catch up. The underlying narrative for the electric vehicle market in 2020 has undoubtedly been Tesla's relentless rally, which has recently culminated in the company being valued with a market cap of over $400 billion at its peak, much more than the time-tested players like GM, Ford, Daimler, and Fiat combined. Unlike Nikola, Tesla develops extensive proprietary technology, which cuts many traditional automakers and suppliers out of its picture. The astronomical rise in Tesla's valuation has pressured other auto companies like General Motors to unlock similar value from the ongoing EV wave. In August 2020, analysis from Deutsche and Morgan Stanley pressured General Motors to spin off its electric vehicle business, stating that such a move dedicated to EV could be worth up to $100 billion. Nothing is off the table, GM CEO Mary Barra said at the time, appeasing analysis and winning a price target boost from Morgan Stanley shortly thereafter. So, what exactly happened to Nikola? Nikola has been in the news for sourcing key technology from third-party suppliers while citing them as in-house inventions. Power inverters that Nikola claimed that it developed were sourced from a company called Cascadia. The Nikola Tre tractor was a non-working Nikola One with H2 and zero-emission hydrogen electric painted on the cab, the Hindenburg report says. As was reported, the company's been backpedaling in the wake of the September 12th Hindenburg research report. As a short seller, the investor bets a stock will go down. Hindenburg had an incentive to expose the worst aspects of the company, of which there are many. Most egregious, Nikola admitted it had staged a demo and shot video, Nikola One in motion, of the Nikola One tractor, the cab and propulsion system of an 18-wheeler rolling down a hill, seemingly using power. Actually, it was just rolling down a hill, as trucks are meant to when you take the foot off the brakes. Nikola's alternative facts explanation: Nikola never stated his truck was driving under its own propulsion in the video. All this led to the board of directors announcing leadership transition. Stefan Gursky, a former vice chairman of GM and Nikola board member, was appointed chairman of the Nikola board. What about Trevor Milton? In the span of just a few weeks, Trevor Milton went from being one of the youngest newcomers listed among the Forbes 400 billionaires list to suddenly stepping down from the reins of Nikola Corporation, the electric and hydrogen truck startup he started, amid allegations that the company is an intricate fraud. The move came 10 days after a financial research firm, Hindenburg Research, that had taken a short position in Nikola, issued a detailed and scathing report that alleged Milton of committing a number of fraudulent acts to help the company achieve its $20 billion valuation. Milton and Nikola refuted the firm's allegations, but not all of them. And in one statement, the company did admit it rolled a non-running truck down a hill for a misleading in-motion video ad released in 2018. The US Department of Justice and the Securities and Exchange Commission have both since opened investigations into the company. Nikola is truly in my blood and always will be, and the focus should be on the company and its world-changing mission, not me, Milton said in a statement. So I made the difficult decision to approach the board and volunteer to step aside as executive chairman. Founding Nikola and growing it into the company that it's become, that will change transportation for the better and help protect our world's climate, has been an incredible honor. The move was a stunning shift in fortune for Milton, who many considered the next Elon Musk. The same fate awaited Nikola, a startup poised to jumpstart the nascent EV market. Milton founded the company in 2015 with the goal of making a hydrogen-based and electric-powered semi-truck for long-distance hauling. It also unveiled the Badger, a passenger pickup truck it said could get 600 miles of range on an FCEV/BEV battery blend and go from 0 to 60 miles per hour in 2.9 seconds. For a fleeting moment this summer, Nikola emerged as the poster child of the new generation of EV startups, scoring huge on Wall Street valuations on the heels of Tesla's stock price, skyrocketing past every other car company. It went public with an SPAC, an old Wall Street tool that's big again in the electric car world, gaining a valuation of $34 billion early on. Things picked up from there when Nikola announced a strategic partnership and investment from General Motors earlier this month. But the situation took a turn for the worst. While Hindenburg Research openly admitted to a short seller position of Nikola, it alleged that much of the company's so-called proprietary vehicle technology was not its own, that prototypes used in promotional materials were not actually functional, that the company exaggerated the number of reservations it currently holds, and that Milton's brother was appointed in charge of building out the company's hydrogen infrastructure, despite his most recent job being a contractor in Hawaii. Milton and his team did refute Hindenburg's claims, but they did not dispute all of them, and in the process they raised more eyebrows than they actually put to rest. As per GM, they are still maintaining that the deal with Nikola is still underway, and that it did all the proper due diligence on the deal before it happened. Although, as the Detroit Free Press and other outlets point out, the current situation is more of a PR black eye for GM than an outright financial risk, given the size of the investment. Now, Nikola are on the spot to deliver on that deal and prove that it has a viable future, but it must do so without the man who started it all. If nothing else, the situation is further proof that the EV startup world is often built on shakier ground than Wall Street investors with dreams of easy Tesla-level money would like to admit. Making cars is hard. Reconfirming plans. Nikola reconfirmed plans to build the semi-trucks in an announcement. It intends to test its battery-electric Nikola Tre semi-trucks in Europe by the end of this year, followed by production in the fourth quarter of next year. The company also claimed that the construction of a plant in Arizona remains on track for it to begin manufacturing activity in 2022, followed by additional work on the facility in 2023. It also hopes to partner with another company on hydrogen fuel cell stations by the end of the year, and to break ground on first hydrogen fuel cell stations in the second quarter of 2021. It also plans to start testing its fuel cell semi-truck in 2022, with production starting in late 2023. The coordinated press releases and executive interviews are in stark contrast with what the company's previous media strategy of making grand proclamations over Twitter was. It's something investors should continue to expect going forward, according to the executives. Exit strategy? After the Hindenburg reports revealed the false claims, Nikola Motors announced that JP Morgan Chase somehow reiterated its buy rating. This made one and only one aspect clear, that JP Morgan Chase was also in on the fraud. JP Morgan Chase owned Nikola stocks and still owns it today. As a result, it would be in their best interest to issue a buy rating on Nikola stock in order for them to make a profit. In addition, the response of GM was a similarly one-sided one. GM CEO Mary Barra claims that she did her own due diligence and is now requesting more stake in Nikola. GM's stake in Nikola quickly fell from $2 billion to $1.1 billion. So the only logical decision from a greedy CEO's perspective is to obtain more free money. The fact that these major corporations are supporting an automaker that has already been proven to be a fraud truly exposes the ethics of the underlying executives. Nikola's remaining executives still have a large stake in Nikola Motors that is worth millions if not billions of dollars. Funnily enough, these executives are actually receiving more stocks in return for keeping the valuation of Nikola Motors at a certain level. Another strategy that Nikola executives seem to be using is staying away from the media. After all, from a retail or institutional investor's perspective, if Nikola isn't on the media, it somehow means that they are focusing on delivering. But in all honesty, this is clearly not true. Nikola executives are waiting to cash in their hundreds of millions of shares. Over the past few days, there have been reports of attempts made to silence online critics such as Sam Alexander and Tom Nash. Both of these YouTubers have received copyright strikes for using footage of the Nikola One in motion, despite the clip being used fairly. Mark Russell, the current CEO, has received 600,000 shares that is worth $14.4 million as a reward. In total, Mark owns over 41 million shares in Nikola, and that is definitely worth roughly $1 billion. Yes, you heard that right, $1 billion. Kim Brady, the CFO of Nikola, has $7.6 million worth of stocks as of this moment, and Britain Worthen, the CIO, has $7.2 million worth of stock. However, this stock is worthless to them right now as they can't sell their shares until December 21st, which is when the lockup on their shares will expire. So, mark your calendars for December 21st, as all of these shares will come flooding out into the market and the valuation of Nikola will literally go downhill. All of these nuclear executives and large shareholders are desperately waiting for December 21st so they could dump their shares on the open market and run away with hundreds of millions of dollars. While you're here, go ahead and click on one of these two videos on your screen. See you there!